Good morning, guys and girls. I hope you are well. So, this morning I have two pairs on watch, and those are Aussie dollar and Euro dollar. My favourite of the bunch, I would argue, is Aussie dollar. And the reason I'm looking at this is as follows. So, if we just zoom right out to the weekly, you can see that we have broken below what is a very significant low there. It stands out even on the monthly chart. We have broken below. Okay, we had one attempt there, so we had this attempt there to move away from the area, but price came back down, most likely because there were still orders there that needed to be filled before price could move to the upside. Of course, this weekly candle here has not closed yet, but at the moment at least it's starting to look like a bit of a washout, like we broke below, washed out all of the liquidity, and then we're potentially moving to the upside from there. Okay, and even if this is only a short-term move up into this area, there is profit potential to be made. So we are rejecting from a very, very significant area of liquidity. As we drill down, we can see that we had this low here. We left a little gap there to this low. That was a clue that we may come back down. We did come back down, and we've had this very strong daily close here. Okay, Monday's close, the wick below, the washout, and then the move to the upside. And look at the subsequent daily candle as well. Just noticing this literally on the fly. We've had another, what appears to be a washout candle. Price breaks below, washes out the liquidity, and then moves to the upside. So even if this is just as I said, a shorter term move to give us something like that, which potentially taps into this liquidity here, even if that comes down from there, comes down again from there, there's still profit potential to be made. So how do we capitalize on a move to the upside where price is now? Well, you can see that we've had the impulse correction continuation. We've broken above and we're consolidating above this high. So when I saw this yesterday, okay, this was not really price action I was interested in because it was a bit of a strange correction that was moving. We left a gap to there. Okay, we left a gap there to that low there. And this, when you've seen this enough times, this just looked like a little bit of a strange structure. There was a similar thing happening on euro dollar, but as with euro dollar, as you'll see when I break down that pair, that has kind of been negated as well now. So I wasn't really interested in trades here because we moved up a little bit correctively and then got into this kind of larger structure straight away. So I thought, okay, well, what I'll do is I'm just waiting for price to break above and consolidate above. Okay, and that's exactly what it's done. Okay, so if it's sometimes when you get these uncommon structures, okay, or what looks uncommon to your trained eye, then they behave or they play out in an uncommon way, which means it can be harder to manage them even if they do play out. But that has been negated now, and what I'm interested in now and why I like this pair the most is because after breaking above where there was a sharp area of liquidity, okay, we seem to be getting this 1, 2, 3 touch structure. Now, if we come down into this area to complete this 1, 2, 3, which is, you can actually see this on the 15-minute as well, the moves are all sharp, okay, and we be retesting the sharp area of liquidity as well. If we were to get that and retest the back end of that, it's very, very likely that this would play out to the upside, and this would be a 1 hour structure, a structure that I can see on the 1 hour chart. So therefore I would look for a 1 hour entry within it. Okay. And you might be thinking, well, what about this? What about this high there to the left? You're kind of trading into that. This is true. But the question I ask myself is, what reason does price have to come down from that sharp area? Okay, it's already broken below a significant area of liquidity, and if we drill down or zoom out rather, there's nothing below this of any significance until all the way down there. So I don't see this as holding much weight, especially if we have something as deliberate as a 1, 2, 3, which retests the back end of another sharp area of liquidity. This is likely, if we get that, to just blast straight through that, okay, and start moving into these areas. Okay, so if there was, if we had, for example, if we had a little, if this was a near miss to another low, significant high time frame low that was sat just below, then potentially this could be a tag in, tag out, and then price comes down to there. But we don't have anything below, so there's no logical reason. Of course, price can do anything at any time, but no logical reason for price to do that. So you can see prices just perhaps starting to give us what we're looking for. So that is the entry that I would look for. I've got the forecast there, a 1 hour, if structured 1 hour continuation forms, I'll look for the 1 hour risk entry within it. So that's what I'll be looking for. Okay. And then we would have, even to that sharp area of liquidity, we would have something in the region of 1.5% to 2% to work with. And then my target would be there. Okay. For something in the region of 7%. And let's just measure this on the fly to see how that looks up, shapes up. So we would have an impulse correction continuation. And then that would give us something in the region. You could make it up. I didn't actually do this until this video was live, but a lot of these things you can sort of eyeball and kind of see that they kind of line up anyway. But that would give us around 7% to work with to that high. As I said, these calculations, although drawn crudely, are mathematical in nature. So it doesn't surprise me that that lines up. And then I would use the mechanical management tool. What would that come to about there? That would come to... So it depends what we get. So we could target, that's not actually a sharp move. We could measure from this range, but overall we've got 7% to work with to that high. So that's what I'm going to be looking for. Okay, and I've got the alert set just to see if we come down to tap into this low and retest the back end of that. So that is Aussie dollar. That's what I'm going to be looking for where this pair is concerned. And then we've got a similar deal. They usually look pretty similar, Aussie dollar and euro dollar. So with this one, we tapped into, we had all of this volume here. Okay. Price broke out, it left a footprint, and then we went from there. Okay. We then tapped into the footprint and we moved to the upside. Okay. We've come back down. And one of the reasons, see, this is a prime example of, we just drill down a bit. So this is exactly what I was talking about a second ago on Aussie dollar. This is exactly what I mean with euro dollar. So notice we left a gap here to this low. Okay. We do have momentum though. Let's just zoom out a second. So you can see that we're clearly moving up with momentum and potentially tapping into this area. Okay. So we had this structure here where we broke ever so slightly above, but notice on this one, this is a higher time frame liquidity point, and we wicked to the area and not through it. So we may just be coming up to tap into that to give us this structure because we didn't break above it, to then come back down to fill this low, which this low left a gap to. Okay, so therefore, if I was looking for exactly the same thing on euro dollar as I was Aussie dollar, okay, let's say this sharp move here, for example, was here, and I was looking for the same sort of thing like that, then I wouldn't be placing that trade because price actually has a reason, if it pushed up from there, to tap into the sharp area if this was down here, to then come back down because it left a gap here to this low. So then there would be a reason for price to do that, come back down, give us that kind of structure, and then move to the upside. So that's what I was talking about, the context of the sharp move on Aussie dollar, which is sat just above price. But as it is, we don't have to worry about that anyway, because if you look, this sharp move, the next sharp move is actually quite a long way above this. So we would easily be able to manage it to that high, even if we did push down from there. We had a similar thing on Aussie euro dollar as we did euro dollar. Okay, so I like the fact that with Aussie dollar, this is a bit more direct, whereas with euro dollar, it's a bit more corrective, the move up, which kind of adds weight to the theory that we may be coming back up to these areas to come back down. The fact that this is a little bit more corrective in nature. But once again, yesterday, this moved up correctively. We then had a correction into this quite deep correction. So I wasn't really interested in any trades here because you could be tagged in and tagged out because of how corrective this move up had been. So what I was actually looking for is just price to just break above this and start consolidating above all of this to negate the the pretty the pretty poor start to the sequence. And we've got that now. We're consolidating above. So what I'm going to be doing, I'm going to be looking for something similar. This may take a little bit longer to form. Just looking at this, just because this has started to ascend, okay, I wouldn't be surprised if we get something like that. And then we get the same sort of thing that I'm looking for, just slightly larger than Aussie dollar may give us. Okay, and then that would potentially retest the back end of that. And then we get long from there. Okay, I'm looking for kind of the same thing, but just because this has started with a bit of an ascent, this structure, that's given me an indication that, especially when the retest of the back end of this is all the way down there, whereas with Aussie dollar it's close, it's given me an indication that this might be slightly larger. And the clue is the fact that on Aussie dollar, not Aussie dollar, sorry, the DXY, it's done the same thing here. It's descending, which is giving me a clue, especially with that little sharp move there, that we may get something like that, the retest the back end of that, and then we drop. So if we do get that, I would actually prefer that, because that would be a more developed structure, and the more volume we generate, the more likely the move is to be aggressive and to travel further because of how much volume it's generated. But that is what I'm going to be looking for today, folks. I'm just kind of monitoring this one a little bit just to see what happens. And I have an alert set just to see if we push down to the bottom of this structure, as it appears we may be starting to do now. So just going to see what happens there. And of course, if I get any trades, then I will update you. But that's what I'm going to be looking for today, folks. Hope you've enjoyed this video. And I will see you again in the next one. And just to say that I will be targeting that higher time frame high there for something in the region of 12%, that high there. Okay, and I would just trail my stop loss at the same time, as well as using the mechanical management tool, which I've showed in previous videos. So that is it, folks. Thanks for watching, and I'll see you again in the next video.